Hello everyone, welcome to the Ichimoku.co daily markets review for the trading day ending Tuesday, February 9th. Firstly to the S&P 500, and here we've seen formation of an indecisive spinning top type candle. The market once again testing below the 1850 level of support, and also testing into this highlighted yellow zone of support and being rejected from there. This is the second consecutive day that we've had such rejection, and the third time in the last couple of weeks that we've had price action rejected from this level. So this level that extends roughly down to about the 1830, 1831 level is a very important zone of support for this market. If that area is breached to the downside, we should be watching 1813, the previous major swing low. Now, having said that we've seen solid support coming in down below these areas, we've also seen resistance coming in at areas above where the market opened, and that was up at 1858 and at 1867, and that's where the indecision comes into this type of candle, where we have a shadow on the bottom and a shadow on the top, and the small body. The small body suggests that neither party, neither the buyers nor the sellers, have made any solid net gain between the open and the close, and we've had the buyers losing commitment at these higher levels, and the sellers also losing commitment at lower levels, and that's why we have indecision. But if we look at this in the context of the trend being down, and that's the way that we have to assess this, that the trend remains down in the first term time frame, and the introduction of indecision suggests that there is a possibility of a change of trend to the upside. So we will be watching for the buyers to come into this market and trade to higher levels, and obviously they will need to trade through these levels of resistance that the market tested to today, and the highest one for today's trading was up around this 1867 and 1868 level. Now, even if the buyers do come into the market over the next few days, we do have potentially strong resistance around 1883, and just above there where we have the Tenkan-sen trading, and just above that the 1800 round number. Moving to the Fibonacci Extension, and once again the market testing around the 100% level, failing to close below there, closing just around that level, and the introduction of indecision around this area suggests that there is potential for a change of trend, and that's also off the back of the sellers losing commitment down below that Fibonacci area at 100% yesterday. Also, we've tested down through to the 161.8% on the Fibonacci retracement. We're in an expansive mode of that. We traded through the 100% yesterday, and for the second consecutive day, trading just through there and being rejected from there suggests, off the back of the loss of commitment by the sellers from the previous day and the introduction of indecision in the market, that there is a possibility of a change of trend to the upside. Now, just looking at our bands here with the S&P 500, and the previous day we saw the market trading down through the lower band. It wasn't a strong bearish breakout down below, and we wanted to see some strong follow through, and we haven't actually seen that today. So this is just a little bit of a hint that perhaps that very strong downtrending price action that we saw previously may have exhausted. The problem here being, however, for that theory is that the market attempted to rally and found resistance at the lower band, and that suggests that that area could continue to hold as resistance, and there still is some weakness, a weak tone to this market. So we will be watching very closely that lower band 1868 for it to potentially hold as resistance, but if we do break out through into there, there is potential for the market to trade up to around the middle of the bands, at least up to about the 1895 region. If the market does continue to find resistance around the lower band, we should watch how the market reacts there tomorrow if we do trade there, and if we see strong bearish activity down through into these lows, and then more significantly down through this swing low at 1812, we then could see further downside development of the S&P 500. Next, just taking a look at the asset class ETFs and looking at where the flow of capital has been to away from the equities area. And here I'm looking at TLT, the ETF for the 20 plus year Treasury bond fund, and we see a very strong uptrend in place on the daily charts, trading up above each of the Ichimoku indicators, looking a little overextended in the depth away from the Ichimoku cloud. The band chart is very strong as well, highlighting a very strong bullish tone. But if we look at the relative performance against the S&P 500, trading above 100% on the relative strength performance, and the momentum of relative strength is above 100%. Both of those indicators are pointing up, and both are up above their respective bands, and suggesting very strong outperformance against the S&P 500. So there has been a flow of capital from the equities market into the bond market. Also looking at gold and the gold ETF, and here we see a strong Ichimoku chart trading at well up above each of the Ichimoku indicators. The depth of price action away from the cloud and the Kijun-sen does cause some reason for concern. It is looking a little overextended, and there is potential for a retracement. Looking at the angle of both the Tenkan-sen and the Kijun-sen and the Chikou span, it does suggest that the momentum to the upside has been very strong, and also the band chart is pointing up very, very sharply, and price action is well up above the upper band, and suggesting that we are looking at a market that is starting to look a little overextended. This market has been up for quite some time, but in terms of relative strength, strongly outperforming the overall market. Looking at relative strength performance on the first subchart here, it is above 100%, up above the upper band, pointing up sharply, and the momentum of that relative strength is up above the 100% and above the upper band, so strongly outperforming, and there has been a flow of funds away from equities into gold as a safe haven as well. Taking a closer look at gold futures here, and here we see a very, very solid market that we saw in the ETF, and a series of white body candles over the last week and a half or so. Very, very solid trading, and most of these days has seen the buyers with very, very strong control and showing very strong commitment. We've taken out multiple layers of resistance through to the 1200 number, and that round number for the last 2 days has held as resistance. For today's trading, the formation of a very weak, indecisive doji candle does suggest that there is potential for a change of trend back to the downside. And this chart, as well as the ETF chart, does look rather overextended in depth of price action away from the cloud and the Kijun-sen, and a retracement wouldn't surprise. Also, the formation of something of a tweezers type pattern here, a potential reversal pattern. And that's where we have the highs of these two candles around the same area, and obviously at that 1200 level of resistance, and something of a harami pattern, a harami cross pattern may have formed. But as with all of these patterns, we require confirmation, so we'll be looking for a potential lower high and lower low. 1185 is an important area. It has held as support for today's trading, so we'll be watching that area very closely too. Now, looking at the Fibonacci extension, and we're comparing the first time frame uptrend that the market's currently in to the immediate previous first time frame uptrend, and here we see the market for the previous day's trading testing to the 161.8% level, being rejected from there, and now today the market unable to reach that area, and formation of an indecisive doji candle does suggest that there is a very good possibility of a change of trend to the downside in the first term time frame. Also, the Fibonacci retracement, and we're looking at the retracement of this immediate previous first time frame downtrend, which was only for about 2 or 3 candles, but importantly we've seen the expansive mode of this retracement trading through 100% up through the major levels, but finding resistance at the 423.6% level, and that tends to be an extreme where we get the retracements from when we have an overextended market, and the market trading through there, and the buyers backing off from that level, and in combination with the short-term dynamics suggesting that the buyers have lost control and just starting to lose some commitment, does suggest that there is also good potential for a change of trend back to the downside in the first term time frame. Now, if we do see that change of trend, we will be watching for the Tenkan-sen to hold as very strong support. And that is a fair way away from where the market's trading. That's actually down below the 1160 area at 1155. And that 1155 region coincides with a previous important area of support and resistance around 1155.6. Next, moving to Nymex Oil, and Nymex Oil is looking fairly weak again, although over the last couple of weeks they have seen formation of some sort of congestion area, and this may end up being an important congestion area, and there is potential for the market to form a double bottom pattern here. We have tested around the lows, just around here, but we don't have completion of that pattern until we take out the intervening peak, and that's up around that $34.86, $35 level. So the market will need to rally quite significantly if we are going to see formation of that pattern, and then we could perhaps see the market trade higher and trade to within the cloud. But for today's trading, we do have a bearish market in all three timeframes. Certainly not looking as overextended to the downside as gold was looking at overextended to the upside, and also the formation of a fairly large black body candle with the sellers in control does suggest that there is potential for further downside, but the market is finding some support down around this 28.42 level where we found some strong support previously, and the market did eventually rally to form that intermediate peak off this support. So a very important area of support here. If we do sell through there in a strong way, then we could end up trading down to the next area of support around 26.66. Any potential rally is likely to find some resistance around that $30 level, and then at the Tenkan-sen indicator around the $31 level. Now, looking at the Fibonacci extension here and examining the relationship of this current first time frame downtrend to the immediate previous first time frame downtrend, and the market has found support around the 100% level, which is close to this very important support area, and failing to close down there just gives us a bit of a hint that we could see the market bounce off this area, but the short term dynamics aren't favouring that, with the sellers strongly in control and showing commitment. So we're not as confident of the market bouncing off this level, this 100% level, because I'd prefer to see some weakness in the sellers to have greater confidence in a potential change of trend to the upside. But there still is potential for that with this combined Fibonacci support and the support from